So let's face it, if you are a Canadian resident, this country is not what most of you expected it to be when you first conceived the idea, planned your first move, or even the thought of moving to this country, leaving your home country to come and live here in Canada. There are just too many struggles and complaints, ranging from the increased cost of housing, just because there are just too many people chasing the few available homes. You leave that, you go to the increased unemployment rate. If you live in a place like the GTA, probably will understand the struggle more than anyone else. I have people who moved here as students and still can't find decent employment after months of living in Canada. Finding decent employment is hard. The cost of basic food items at the grocery stores is over the roof. You name it, we've heard it all and we've seen it all. But despite all the bad things that is going on, my sincere hope is that there are better days ahead of us and that the Canadian government gets to do something about the economic hardship in this country very quickly, because despite their best efforts, nothing seems to have worked. It doesn't seem like they've been able to move the needle much. However, with all that being said, there are some financial changes that you might want to pay attention to. If you are someone who cares about your finances, you care about paying less tax, not paying more tax than you have to, and you also care about growing your net worth. Let's break it down in this video so you can see how you can get to keep more of the money that you make in 2025 by the time the year comes to an end and see yourself in a better financial position. Number one is the tax bracket. There has been changes to the tax bracket. The tax brackets are getting increased, and this is basically due to inflation adjustments. The income threshold for each bracket has been shifted. It's been moved upward. This means that you might find yourself in a different tax bracket in 2025, which will definitely affect how much you get to owe in taxes. For some people, this will mean less tax payable. For 2025, the federal income tax bracket has been increased by 2.7%. This comes after a 4.7% increase in 2024. So Canada goes by a progressive tax system, and the federal rates are: 1, you will get to pay 15% for earnings up to $57,375, but in 2024 this amount was $55,867. So that's been a shift upward. The second tax bracket, here you get to pay 20.5% for income between $57,375 and $114,750. But in 2024, this income range was $55,867 to $111,733. This increase goes up until the highest tax bracket. There are several in between, but here you get to pay 33% for income over $253,414 in 2025. You get the point now. For me, this is good news and a win, because even if you have the exact same income in 2025, you could see yourself paying less tax. If, say, for example, you just edged over the first tax bracket a little bit in 2024, you could see yourself in the first tax bracket this year, which means less tax. Next is the basic personal amount. For the year 2025, the basic personal amount has also been increased. And if you do not know what that is, the basic personal amount is just a federal tax credit. It's a non-refundable tax credit, and the goal is simple: reduce your federal tax bill. Fact is, Canadians pay taxes at the federal level and also pay taxes at the provincial level. What I am referring to here relates to the federal tax. In 2025, the range for the basic personal amount is $14,538 to $16,129, depending on your overall income for the year. The range for 2024 was $14,256 to $15,705. This amount is important to know because if your income is less than the basic personal amount, you will not get to pay any taxes at the federal level. Next is the CPP, the Canada Pension Plan. If you live in Quebec, just move aside. This one is for people contributing to the Canada Pension Plan. Those of you who live in Quebec, you get to do nothing about this. The amount that determines how much is taken off of your paycheck for your CPP contribution will be going up. And for the sake of simplicity, let's just say there are 2 stages to the CPP contribution, and this will all depend on what is referred to as your pensionable earnings. At the first stage, the year's maximum pensionable earnings, or YMPE, for 2025 will now be $71,300. Last year, it was $68,500. At the second stage, this one is just like an additional CPP contribution, which impacts those who are higher earners. For this one, the year's additional maximum pensionable earnings, or YAMPE, for 2025 has also been increased to $81,200. In 2024, this amount was $73,200. So this will impact mostly those who make a high income, depending on where your pensionable income falls at the end of the day. The key takeaway for me here is that while this means a little bit more money coming off of your paycheck every pay period, you do not have to feel bad about this, because this money is going towards your pension. And when it comes to your pension, the more money you put down towards your pension, the more money you will get to take out to support yourself when you eventually retire. However, I want to urge you to not solely rely on your CPP contributions for retirement. Take some of that extra money that you have and take advantage of accounts like the tax-free savings account to grow some of that money tax-free. Next up is the RRSP, the Registered Retirement Savings Plan. For the RRSP, we also have extra contributions for mostly the wealthier Canadians. Let me explain. Just like the CPP, the RRSP is also designed to fund your retirement, and you can get to reduce your tax bill with your annual contributions, but your annual contribution room will depend on your income. Each year, your contribution room will grow by 18% of your earned income from the previous year. This includes income from your job, net business income, and any rental income if you are a landlord. For example, say you have an annual salary of $100,000. You will be getting 18% or $18,000 worth of contribution room. So just do the math. However, there is a cap to how much this 18% can turn out to be. For the year 2025, this maximum limit has been increased to $32,400 compared to the 2024 annual limit of $31,560. You will need to be making above $180,000 to get to this higher limit. So if you still earn below $180,000 like me and many other Canadians, the new contribution room for you will still remain the standard 18% of your annual income from the previous year. But if you earn more than $180,000, don't go just contributing 18% of whatever that value is. Your maximum contribution is capped at $32,400. The thing is, I know that the RRSP comes with a lot of rules, but this can actually be a very powerful tool if you can use it the right way. Most people will be earning less money when they eventually retire, but there are benefits because you would have successfully saved yourself from paying higher taxes in your working years, and you still get to enjoy the benefits of paying taxes at a lower tax bracket when you retire and begin to pull money from your RRSP. So this one is a big one, the home buyers plan. This one is good news for those people who are still looking to buy their first home. The home buyers plan is being significantly improved this year as well. This is a program that allows you to borrow from your RRSP tax-free to help you with a down payment on your first home. Up until April 16th of 2024, you could only withdraw $35,000, but this amount has been increased to $60,000. And as a couple, you can pull your money together and withdraw up to $120,000 tax-free. And if you now get to combine this with the new first home savings account, that's if you've been contributing since the inception of that, you can get to see that you will be able to raise a significant amount for a down payment on your first home. But here are some of the things that I want you to remember. When you take money out of your first home savings account to buy your first home, you do not have to pay this money back into this account, because what you have simply done is use the amount in this account for the purpose that it was originally designed for, which is to buy your first home. But the rules are different when it comes to the RRSP. When you take money out of your RRSP, just see it as a personal loan which you need to pay back. Repayment would usually start after 2 years of this withdrawal, but this period have also been extended to 5 years, which gives a lot of people an extra grace period. So what you're eventually doing here is just borrowing money from your retirement account, and if you do not get to pay this money back, the government will just treat this as an income for you, and then you get to pay taxes on your withdrawal. So you get to make the decision and do what is best for your own financial situation. So finally, the tax-free savings account. Come closer and pay a little more attention here, because I saved the best for last. Everyone gets an extra $7,000 worth of contribution room. This just simply means that you have an extra tax-free room for you to save, invest, and grow your money tax-free. The tax-free savings account is one of the best ways that you can build wealth in Canada, and everyone gets to benefit. There is no downside, so you need to make the most of this account. Start investing right away to give your money more time to grow. Everyone gets to gain this contribution room on the 1st of January every year. Do not worry if you don't have any money to contribute. You can always take advantage of this account because your contribution room gets to be carried forward every year, and everyone in Canada gets the same amount of contribution room. If you are new to Canada, you just moved here recently, you are not a Canadian citizen or PR, let this part of the video sink in. You do not need to be a Canadian citizen or permanent resident to take advantage of the tax-free savings account. As long as you live in Canada and you have a valid social insurance number and you're up to 18 years old, this includes students and other temporary residents, you can open a tax-free savings account, start saving, and start investing. I arrived in Canada in 2020. I started investing in my tax-free savings account in 2021. The maximum contribution room I have accumulated so far is $38,500, but my tax-free savings account is worth about $60,000 as of today. The excess amount in my tax-free savings account is just investment returns. I invest in the stock market and I will not get to pay any taxes on the excess in my account. Watch this video for step-by-step process on how to start investing. So please take advantage of this and start growing your net worth. So that's a wrap for this video on financial changes that you might want to pay attention to in 2025. Remember that staying informed is always the best way and the best shot that you will have at making the best decisions with your money. Change can be hard and daunting, but I am rooting for you. This is also an opportunity for you to sit back, reassess, and make a plan on how you can have a prosperous year ahead. Let's pay attention to these small things and little details that a lot of people ignore, and hopefully we can make 2025 a financially successful year for you and your family. So thanks for watching. Don't forget to like, subscribe, hit the notification bell if you wish to stay updated on my financial journey, and I will see you in the next video.